Okay, refer to worksheet 1 of your worksheets. Okay, so let me go through again worksheet 1 for the benefit of those who are not present during my lesson. Okay, so for the first thing you need to know about accounts is bookkeeping and accounting. Okay, bookkeeping is basically clerical work. Okay, it's the recording of business transaction. Accounting is a bit more complicated. It involves 5 items including recording. So when you look at bookkeeping, it's actually a simplified version of accounting which only has recording, but accounting has more. Besides accounting, it has summarizing, analyzing, interpreting, reporting of financial information. Okay, the second part of this question, distinguish between bookkeeping and accounting. This is basically just to help you phrase your answer in the event when we need to explain the difference between bookkeeping and accounting. Okay, next. Okay, you look at the 2 roles of accounting. What is accounting used for? Basically, it helps with stewardship and decision making. These are the 2 roles of accounting. Okay, in detail, what is stewardship for? Okay, the steward needs to provide business owner with financial information to help him make decisions on how to manage and operate the business. So when you look at stewardship, it's basically like you are the assistant of the business owner. You help to provide business owner with information. Alright. Okay, the second part, what is accounting used for in terms of decision making? So it helps sole proprietors. Sole proprietors here refers to business with only one owner. Okay, repeat again. Sole proprietor here refers to business with only one owner. Okay, so it's like a business with only one boss. Alright. Sole proprietors and managers use accounting information to make decisions on how to plan, control, monitor and operate the business. Okay, so 2 roles of accounting, stewardship and decision making. Okay, help our bosses to get the information they need, or maybe us as bosses of our own, okay, help us to make the decision. Okay, so basically accounting is making use of information, making use of how much money we earn, how much money we spend. Okay, based on that we help our bosses manage the business, or we help ourselves identify the areas where we need to improve for our business, okay, to make decisions. Okay, that's all for accounting, the roles of accounting. Next, we move on to stakeholders. Okay, stakeholders are people who are interested in the affairs of the business. Basically, stakeholders refers to people who are concerned with the business, who are interested in whether the business is doing well or not. Okay, so here are a list of stakeholders. So proprietors, managers, employees, shareholders, investors, banks and other lenders, suppliers, customers, government, public and competitors. Okay. So what's the difference between all of them? What is the thing you need to know about them is that stakeholders can be differentiated into 2 types. One is called internal stakeholder, identified by the I on top. The other type is external stakeholder, internal and external stakeholder. Okay, the thing you need to understand is that internal means it's within the business itself, external means it's outside of the business. Okay, when you are giving answer, I prefer you to memorize at least 2 examples of internal stakeholders and 2 examples of external stakeholder. So probably sole proprietors and employees. Okay, I don't want sole proprietors and managers because these 2 are very close. I prefer you to give me sole proprietors and employees, or managers and employees. Okay, same goes for external stakeholders. Shareholders and investors are a bit similar, so you give me one of them. So maybe shareholders and banks. Okay, banks and other lenders are very similar. So again, just give me one of them. So perhaps just investors and other lenders, or investors and banks. Okay, depends on your personal preference. Okay, so but anyway, just take note to give me similar answers. Okay, next, state the accounting information needed by the stakeholders. These are taken from the textbook, what each type of stakeholders need. For example, like here, employees, our internal stakeholder, they're interested in the profit and cash of the business. It's taken from the textbook. You can read from the textbook for more information. Okay, banks and other lenders, our external stakeholder, are interested in the profit, assets and liabilities of the business. Okay, so these are just examples. Okay, you need to be able to quote them. Okay, next, explain why stakeholders are interested in accounting information. So in general, why are stakeholders interested in accounting information? It helps them to make business decisions. That's all. Okay. In later part of the lesson, in next lesson, I will talk about this. Okay. Explain why employees need the financial information. Basically, it's just talking about individually why, like say, employees need to know profit and cash of the business. Okay, why employees need profit and cash of the business, why bank and other lenders, okay, need profit, assets and liabilities of the business. Okay, same is taken from the textbook. We'll copy this in the next lesson. We'll copy this in the next lesson. All right. So that's all for page 3. Okay, next we look at page 4, last page of your worksheet 1. Things you need to take note of. These are called the professional ethics. So earlier on, it's called the roles of accounting. There are 2 roles of accounting: stewardship, decision making. There are 2 professional ethics: integrity and objectivity. Meaning, what are these? Okay, basically, the character you need, okay, as a person, as an accountant. What do you need to? What kind of values do you need, okay, for yourself when you do accounting? Okay, basically, you need to have integrity. To have integrity is to be straightforward and honest in all professional and business relationship. To be objective is to be unbiased when making a professional judgment in the accounting process. So these are 2 ethics, 2 professional ethics you need to carry when you do accounting. Okay, next is just explaining the importance of having integrity and being objective. Okay, this is because stakeholders rely on financial reports to make business decisions. So stakeholders are counting on you, okay, to give them accurate financial information. In the event when you don't have integrity, when you're not being objective, so what will happen? If they are given false or inaccurate information about the business, they are likely to make poor decisions. Okay, so they will suffer because of your inaccurate or poor information. Okay, that's all for worksheet 1.